Compound interest, the eighth wonder of the world, something like that, right? And so down below, it tells me my final balance is $44,720. Total compound interest in that time, 34,720 bucks. Obviously. Hello, YouTube. How are you? My name is Mike. Thanks for joining me today and the other 1,991 subscribers. Much appreciated. We are 9 away from my target of 2,000. First of all, thank you so much for watching my channel. I got a good compliment the other day. The person said it was like talking to a buddy. So, that's what I'm trying to go for here on this channel. So I really appreciate that. Yeah, I've been really going hard on this channel since September, mid-August. And so the grind is real, but I want to bring to you information about high yielding ETFs. Now, for me, the one that we're talking about today, I'm not currently invested in them, but they do look promising for sure. And I want to go over all three of those. So today we're going to talk about XDTE, QDTE, and RDTE, which is a brand new little tiny 8-pound baby from the Roundhill gang. So we're going to discuss all three of those. Do me a favor in the comments. Let me know if you like them, if you love them, if you have money in them. What do you like about them? Talk to me about these funds in the comments, and maybe they can help educate other people in making a decision to invest in these, or not to invest in these, depending on what you say. But remember, everybody, if you're reading the comments and watching this video, this is not financial advice. This is just for entertainment. I hope that the duration of this video you are thoroughly entertained enough to hit the like button and subscribe. So without further ado, let's get into XDTE first. Now, I went ahead and went to the website, which is Roundhill's website, and I opened up how much they have paid so far, and it's been good. XDTE, they do these 0 day to expiries, right? And so their big thing is that they like to write covered calls, and they also have action, in the post market, pre-market, post-market, aftermarket, whatever you want to call it. And the rumor is that, I mean, it's not a rumor, but a lot of action happens during that time. I don't know. Have you ever woken up at 7 a.m. and the stock that you wanted to buy is already up, 25%, and it's just too late? So that's what these guys are doing. They're writing options calls on the S&P 500 for this one, and they're actioning that whenever the market is closed. So that's how they are generating income for you and for your dividends, right? So that's how you get paid. What's the benefit of this company? I don't know if it's a benefit or a detractor, but what people like about XDTE and Roundhill in general here is that they get paid a distribution every single week. So every Friday, Roundhill pays you. Now, because it's every week, it's not going to be as astronomical as some of the other high yield funds out there, like YieldMax's Misty, Nvidia, Coney, things like that. So they're a little bit smaller. However, people are really attracted to the weekly. So I want to talk to you about that as well. So first thing I'm looking at here is XDT. Now I've kind of put together, I just kind of copy and paste. So it's not like I've done a ton of work here. Everybody, you can also do this, but I went to XDTE on Roundhill's website. I just copy and pasted all of their payments. And so they started paying out March 28th, and they paid out every single week. So you can see in column M here are all of their payments, which is every single week. And they've so far paid out $8.57 in distribution since March. So that's officially 8 months as of 2 days ago. So $8.57, and I did a little average. So I just took the 857 divided by 8 months so far, and so the average is $1.07 a month. And so for people that are in the new way of doing things with these yield max and these high yield funds, you're probably used to, and I say this almost sarcastically because it's only been happening for a year and a half now, but you're used to bigger numbers. And so, how does a fund like this or what you're invested in stand up to the test of time? And what I mean by that is, what if we have a crash or a correction, or the stock market does a Nike swoosh like at COVID? What happens with these funds? Do they still continue to pay out? How about the performance of the dollar amount of the fund itself? So these are things that I think I would be concerned about. And I mean, I hear a lot of talk about going all in, and all in, margin, margin, all in, all in. And for me, I'm not really down with that, because there is risk to these as well. So I think it's important to understand that there is risk involved when you invest in high yield. What is the downside? So let's take a look at the share price itself. So I'll get my head out of the way over here. Give me a second. There we go. So XDTE has been the most stable of the three. Excuse me. And I'm just coming off my cold. Mike in my comments. I'm coming off my cold. So if I mispronounce a word, please excuse me. Mike. Thank you very much for the grammar police. I appreciate that. So I mean, XDTE here has been doing really, really well. I mean, it's only up 1% in the 8 months that it's been out. So you think, oh my goodness, up 1%. That's terrible. But people aren't really in this for the share appreciation. That's an added bonus. But yeah, up 60 cents since March. I mean, that's great. You know what's good about that is the price of the share isn't going down. Plus, you're getting your dividend, right? Your distribution every single week. So I think that's really, really good. I'd be very happy with that. Now, is it going to be enough to help you retire early? That's the question. So I went ahead and I just found a calculator on the old Google machine here. Excuse my cough. And I just found this one. You can type into Google anything, dividend calculator. This is actually the very first one that came up. So, is it 100% accurate? I haven't back tested this to make that happen, but it seems fairly legit. So I just punched in an initial balance of $10,000. Just a nice round number. And right from Roundhill's website on XDTE, they are looking at a 15% annual return. So I'll go ahead and punch that in. I say I want to keep it in there for 10 years. Ideally, I'm retired in 10 years from now or less, right? Depending on how things go, but ideally 10 years. Now, I have this compounding frequency at weekly, so that means that I'm just kind of dripping that money right back into it, not taking any money out. Compound interest, the eighth wonder of the world, something like that, right? And so down below, it tells me my final balance is $44,720. Total compound interest in that time, $34,720, obviously, right? So $10,000 investment. So this is kind of a set it and forget it mindset with this one. And for me, I love being able to have passive income for sure. I love it. I love it. But I do get worried about those down markets. So what do you do with that money during that time? That's something you'll have to dig within to find out, right? But you can see this really cool little bar graph down below. Shows you, sorry, how the power of compounding happens here, and you can see it as we get into year 6 and 7. It really starts to take off, and then 9 and 10 look out, right? So if you had a longer window, then I mean, take a look at 10 years, right? If you have 20 years for this, let's punch that in. So we were up 30 grand in 10 years by doing nothing. Let's change it up to 20 years and see what happens. Wow. So all of a sudden, that compound interest really takes off after year 10, doesn't it? Right. So we went from um, up 30 grand to up 170,000 just 10 years after that. So that's a really, really cool thing to see with compound interest. And I don't want to be like a Debbie Downer in all my videos, but I just want to exercise that caution, right? It's nice to see that snowball number at the end of the rainbow here, but how do we get to the end of the rainbow? Do we find a leprechaun and do we ride his coattails all the way? That's the question. So that's your XDTE conversation here. I did do a poll on my YouTube channel here, and the poll said which one's the best, right answers only. And overwhelmingly, most people voted QDTE. Let's kind of discover why right now. So QDTE is in the middle over here, and it's been out at the same amount of time as XDTE. And so this is going to follow the Qs on the market. I'll move my face out of the way over here. And so far, it has paid out $10.77. So it's paid out $2.20 more than XDTE in the same amount of time. And its average monthly payment, you just take 1077 divided by 8 is $1.34. That's way down there at the bottom. So $1.34. So I can see why people are saying, "Oh yeah, QDTE." From initial looking at it, I mean, obviously that's $2.20 more over 8 months, right? So I can see why people say that. Now let's take a look at QDTE on the chart itself. Remember, XDTE has gone up 1.14%. Let's take a look at QDTE over here. In that same period of time, has gone down 8%. And so when I first did my initial video, which I'm going to link right up top here, and I'm also going to put it at the very end of this video. That video, by the way, just about 10,000 views, which is my most I've ever had. Thank you very much for watching that, by the way, at the end of this video. At the time, we talked about NAV erosion, right, with the QQQs. And a lot of people were saying, well, the QQQ market has underperformed, and so it should start booming back here. Well, that has not happened, as you can see. And it's down. The share price is down. So what did I say? Let me go back 1 second. You've made $10.77 so far, which is good. That's definitely good in that period of time. But the share price is down 379. So you're still up $7, right? You're still up $7, but hold on 1 second. XDTE here is up $8.57 in distribution. So I know that you love your QDTE, judging by that poll I put out there. But I mean, that tells me that XDTE has overall performed a little bit better. Yeah, you may have taken in more income, which is the goal for a lot of us, right? So I can see it from both sides for sure. And I don't want to hurt any feelings. Just I'm an outsider on this one. I don't have any money invested in these two. But I like to watch them because they are definitely intriguing with their 1 week payouts, right? Every single week. That's nice. So that's cool. Now I took a look at the website here. Where do I want to go? Right here. And their goal here, their distribution rate as of October 31st is 25.79. Let's just bring that up to 26%. Let's get crazy. Okay, let's get crazy. Let's change this number right here on the calculator to 26%. And let's do the same amount of money into the fund. Let's say 201 years. Wow. Let's say 10 years, right? And now this is quite a bit different. This is way, way better than XDTE, isn't it? Right. So, XDTE was at 40 whatever thousand. This is at $133,000 compared to your initial deposit of $10,000. So that's huge. That is huge. Now, do we expect QDTE on the chart here to continue to go down every year? Or do you think it will stay the same, if not go up? Because if you think it'll stay the same, if not go up, then I mean, look at that difference between XDTE and QDTE. It's a massive, massive difference. So I think that's that pie in the sky people love to look up and think, oh yeah, this is going to be it for me. 10 years from now, I'll have $133,000. But that is the absolute dream in my eyes, right? So I don't know. Right? Let's do 20 years just to do the same as XDTE. It's kind of fun to do this stuff, right? But oh my goodness, you could see after 10 years how it really compounds. Now, I know age and majority that watch this channel are between 30 and 65. So 20 years from now, if you're 30 years old, 50 years old, you got $1.79 million sitting in your account, what do? I'd be out. I'd be retiring. But again, that is the absolute dream. So who knows? Who knows the future? Not me, that's for sure. So I don't know. I don't know. That's pretty good. That's for sure. What about the QDTE performance though? That's the only thing I would be really concerned about. If you have money in QDTE right now, monitor that. If it goes down another 8% in the next year, I don't know. For me, I'd be out. They got to do a better job of keeping that NAV stable while paying me my money. And that's all I think about that one. That's how I feel about it. It's just my feelings. You can't tell me they're wrong because they're my feelings. They're not yours. Okay. But you know what you can do? Tell me your feelings in the comments. And you know what? Let's keep it civil. I'm a good guy. You're a good guy or lady. And let's educate each other. I love it. I love being educated. So we have one more. This is a brand new baby. Like I said, it's RDTE. And it's so little, it's so new, it's not even on this list up here. So I'll go ahead and move my face over for you guys. And then I'm going to scroll up. I don't know. Did you guys ever have the Friendly Giant as a show when you were growing up? Is that just a Canada thing? Look up, look way up. And I'll call Rusty. So here is RDTE following the Russell. It's brand new. It just came out here in August. Oh, what's going on here? September came out. So yeah, it's paid out $1.34 so far. Pretty darn good. People are very, very happy with RDTE so far. The Russell, ever since interest rates started going down, the Russell started going up, and that's more small cap type stocks out there. And so it's pretty volatile. If we have a recession, knock on wood, if we have a downswing in the market, the Russell might be one of the first ones to really kind of take a dive. So this one is more risky, in my opinion. It's also pretty volatile, which means that the premiums may be higher. But you can see if we take a look over to the left here, they're fairly similar to QDTE. So far, I mean, we've had one huge one there, 41 cents. You had to have been happy with that. But let's take a look at it over here, and I'll get my head out of the way. So 45.45, that's a nice number, but it's only been out for a couple of months now. September 10th it came out, and it's up 8.21%. So that's really, really good. You got to be happy with the return on that right there, plus your distribution so far. That's like a double positive. That is always good. It's risky because what happens, right? And everybody thinks, oh man, is the market going to go down? That sort of thing. But or is it just going to go up forever? Stocks just go up forever, right? Nothing ever loses. But I'd be happy with that for sure. So Russell here, the RDTE at Roundhill, they're trying to generate 30. Well, right now they're generating 31%, which is absolutely massive. 31%. Compound that now weekly, that's going to go up big times. Let's change this up to 31%. Same $10,000 down. You can see here, oh my goodness, in the next 10 years, $219,000 if we're compounding this weekly. You're just kind of setting it and forgetting it. Everything is rainbows and unicorns. The market doesn't crash ever. And for the next 10 years, you've got yourself $219,000. Woo! That's pretty nice. I could probably retire. I think I could retire on 219,000, especially with these high yield funds. I think maybe I could. But let's do the 20-year thing. And again, remember, this is rainbows and unicorns. $4 million in 20 years from now. That's amazing. So that's amazing. You know what I'm expecting? I'm expecting Oracle to screenshot that last motion of mine and put me on a video. Thanks, buddy. But $4.8 million. That is, I'm going to say that's unreasonable. An unreasonable task to get to. But, it's a brand new fund. It's paid out 4 payments so far. So let's not get too excited about this one just yet. Let's see how it performs. Let's see how the Russell performs. I have seen the Russell not perform very well for the past 4 years. And now all of a sudden it's waking up because interest rates are going down. One of the reasons. But yeah, I'm not going to get too excited. Now, if I had money in the game, which one would I put it on? I'm not into like super risky. That's my thing. I'm not into super risky. I like making money. It's a tough decision for me. I don't know which one I would do. You guys tell me. Right now, I am building. If you've been following along, by the way, thanks for subscribing. I'm building up funds over at YieldMax. So I already have my Nvidia done. I think I'm going to buy 2 more shares to make it 400. I'm working on Misty. I did have 176, but I made a covered call error. So I'm back to 100. Excuse me. And I'm also building on my Coney. I've got 20 shares. So I'm thinking like $10,000 into each fund and see where they go, and keep them at $10,000 each fund, and see where they go over the next few years here. And then, those are the 3 that I really like for me and my personal risk level. Not for you, maybe. But I like Nvidia. It's kind of slowing down, but I have a feeling Nvidia's first quarter and second quarter are going to be better than what their fourth quarter was this year. They said it themselves. Misty, I think it's going to be good for the next year, or who knows, more. And also Coney. You know what, guys? I just signed up for Coinbase. I bought my first Bitcoin ever, and it's not the full Bitcoin. I own like 0.000079% of a Bitcoin. $100. That's nothing crazy, but I used Coinbase, and it was so simple to use. I loved the functionality of it. It's just a great site, good app. And so I've got 20 shares of Coney, which is an ETF that follows Coinbase from YieldMax, and I'm going to build that up here as we go too. So which one of these 3, now that you know my risk tolerance level, would you recommend that I go with? And I'd be curious to see which one you think. But know that I'm not going to be doing that anytime soon, because I'm still building up those 3 to where I want to get to. I do want to get the 6 pillars of income that pay me $500 a month consistently. And then once I go from there, then we're going to go more stable. So we'll see how it goes, right? But I just wanted to share this with you. I think it's really interesting for you to think about as well. What is your risk tolerance? What happens if the market crashes for a year, 2 years, 3 years? Will these funds still be here? What will the value of them be? Are you still going to get those lucrative distributions every single week? And what happens if you don't? What some people do is they set up stop losses, 10%, 10% stop loss, things like that. It might be a good idea to start thinking about that. And also, if you're not super financially sound, it would be a good idea to seek advice from a real financial advisor, not some Joe Blow on YouTube, right? So be cautious of who you watch out there, and what advice they give you. That's for sure. All right. Anyways, you guys, it has been an absolute pleasure talking to you today. So happy that Tom Brady Green Jr., myself, and you got together today. My name is Mike. This right here is Health and Wealth. Thanks for tuning in, and there is my QDTE video. Enjoy, and we'll talk to you the next time. Bye for now.